Hello, this is Vance, and this is Wednesday, January the 11th, 2017. And these are the CL trades for today using the slow hand method for price action. Well, it started out as we started out this morning in a pretty tight range. And so if let's just go back for a second. Last couple of days, I think it's kind of telling about what really transpired today. If we look back since Monday, and this was just after the holiday, price had peaked out at 53.83 when it opened up after on just 2 days ago. And this is after last week was a short week because of the holiday, New Year's Day, and the Christmas, of course. But so price opened up on Monday or on Sunday evening, Monday night, at 53. Right about 53.83, somewhere in that neighborhood. And then from there, on Monday we traded all the way down. We traded down to down to 51.76. And then when price opened yesterday, it traded up. By the time it came at 9 o'clock, 9 o'clock was right here when the market opened. It was really range bound for most of the overnight session, and then traded down even further. So it traded down to 50.76. Now, as you recall, yesterday when I was talking about this area, I was talking about where price was going to perhaps find a bottom and retrace somewhat. I was talking to I think I might have mentioned that, but we didn't have it. I thought it was going to bounce right here at this area. It didn't work. It came back a little further. It didn't work. I had a little bit of retracement, and then I guess it just wasn't enough momentum. It just fell off for the rest of the day. So today, when price opened, it really was again range bound in this area. Now, the first trade I saw after the market, just about 9 o'clock or so, I saw the first trade is right here. Now, if you look at the overnight price, and there's a couple of things I want to point out here. The first thing is the overnight price. The overnight price, it reached a high of 51.33. So price opened here overnight at 50.81, so it trades up to 51.31, roughly 50 ticks, half a dollar. Trades up to here and then falls off. And this was just before. This is about 8 o'clock this morning. This is 8:15, and this is just before the open, about 8:48. Just 9 o'clock is right here. This is where 9 a.m. is. Now, this was a trade that I took. I took this trade, and I'll tell you why I took this trade. Is that a couple of things. There is room to get out to this double top here, and so when you're looking at taking a trade, I was looking at this was really kind of a second entry short or second entry long. I mean, we already had. Let me just move these out of the way, and I'll just make this a little bigger. Okay, we had this move up. And right off this bottom, we had this pretty strong move up, which was, by the way, about, I can't even remember what the, let's take a look. So we moved up 28 ticks. So I moved up to 28 ticks. We had this pullback. And now what I was saying is two pullbacks. We had the first pullback to here. Price moves up to here. We had a second pullback. Yeah, a little bit of hesitation. But then we had to put to this low. Went a little bit below this, pulls back again. Again, price can't go down further the first time, comes back again. And so I look at support, and I got in right here. And I entered in at this area and took this trade long. Now, why did I take that long? First of all, my 15-tick stop is below where the previous low was. I felt we already had this move up, and I was looking for another leg. And so I was looking for somewhere in another leg of about equal magnitude, and it just happened to work out. Yeah, it went up here. Get your first contracts off. If you have if you're looking at 15, and then another 30 ticks, pretty decent move. Now, so that was really the first trade. After that, it took a while to work out. Let me just get rid of this. It took a while to work out. What I mean by a while to work out is that by the time it reaches up here we're going. This is just after 9 o'clock. So, I got the first contracts off almost immediately. But by the time it moves up to here, it's 9 o'clock, and then price started to rotate in this area. This is 9:30, makes it a little bit further low, comes back down to here, and then it starts turning up. Now we're into 9:45, and so when you see this area like this, today is the Department of Energy report, and as a result, you've heard me say this on a number of occasions. Typically, when the report is about to come out, price will start tightening up. I mean, they're waiting for the number, and that's at 10:30. So anytime after 9:30, if we don't really have a move, and this is 9:30 right, 9:36, price is trading up around this area. So where do you? There's no real trades here. I mean, you can argue that here's a second entry long right here, but whether you take the trade, it doesn't give you enough room to get out. And where's your bottom? There's no way, unless you see, this is a really tight range. I mean, you have to kind of limit in, and even if you do limit in, there's not a really good bar to. So, I mean, this is I was thinking here, but now we have this. Where's your target? Your target has to be within 15 ticks. And if you see the top of this, where the high is, anytime you get in here, it's really too narrow for your first target. So there's really no way to get in. It does give you the room when it drops down to here. Now it's going to, if it retests this area. But again, there's really not a really great setup. It doesn't really break this trend channel. It's kind of moving up and moving back. It's nothing really clear. We do get a better signal here, but by that time, this is 10 o'clock. And at 10 o'clock in the morning, I'm really, where's price going to be? Now, this trade here, had you gotten in this trade, and your stop is below this area, it's not a great bar to enter on. It does work barely. It just barely works. And then it rotates down again. So this is 10 o'clock, 10:14, and then we go up to this area. And so right up until this is 10:14 here. And see how tight it's becoming very tight. This is 10 o'clock, 10:07. So it's a really tight range. It's waiting for the number. We know it's waiting for the number. So there's nowhere to get in. And when the number does come out, look at this drop. This is 10:20. This is 10:29. It drops down 10:30. So in 10:30, it drops from 48 down to 85. So we lose 50 ticks, 60 ticks, really very, very quickly. All right. Now, once a move like this happens, from here to here, this is 2 minutes, 32. 10:30, 10:32, right to here, 10:32:38, 10:32. So this is moving. This is causing a lot of volatility. Notice this though, that where the opening price was, where the yesterday's low was, and where the daily low is, which is, it didn't come back down there. From there, a few minutes later, and this is at 10:36, price finds support and rockets out of here. Now, can you get in on something like this? Here it is. It's 10:38. This is 10:40. 2 minutes to go this way. So it took us 2 minutes to get down here and 2 minutes to go this way. Now, can you trade something like this? Or what causes this? I mean, it's interesting to note. I mean, you can come up with what you could say is that, well, what caused this in the first place? Well, it's evident at this juncture that the move down for the last couple of days brought prices to a level where I think was too low. And as you recall, I was thinking like this seemed like an oversold condition to me, especially yesterday. And we can see that we traded back up to almost where, not the daily highs, but we certainly did retrace to yesterday's price at about 10:30. Yesterday's 10:30, and price opened at about 9 o'clock here, so it really opened at 51.96. So down at this level at 50.72 was too low. Now when price moved back up, it moved back up very rapidly, and it really spiked and channeled. So we had this trade down, and I think this was just an instinctive, emotional move. It couldn't get down there and couldn't stay down there, and right away price found support and came up in the other direction. Now, I don't trade this kind of stuff. I mean, and there's really no way to do it. But after you have a move like this, a violent move, you have to also expect that we're going to have some real big gyrations for the rest of the day, or at least for the next hour or so, because of the fact that now everything is a little more volatile. It'd be more dramatic moves. I mean, that's been my experience. Now, at 10:50, at about 10 to 11, I think this was a relatively good setup here. You could have taken this. And the reason is, and this is the reasoning, we had price really rapidly move up here. It trades back down. It makes a double top here, another double top, pulls back. this is really almost the bottom of the range right here. So we have a double bottom here. It's a little further, moves back up, moves back down. And so I'm looking at this area of support. It really can't get below 51.54. And that happens to coincide with where prices moved up to this earlier this morning. And if you look at the far side of the chart, it was also kind of an area that was yesterday was, this area right here at 11:30, 51.60 to 51.39. It was somewhat of a, it turned into, there was a range yesterday, earlier this morning, the top of the range for this morning and so forth. So again, I didn't think we were going to be heading back down here. I didn't think that that was realistic. We had this move down here first time, found support, blasted out of here. I didn't think it was going to move down. So anytime we felt support here, I think this was a reasonable trade to take. Plus the fact that in order to get back to these double tops up here, there's your 15 ticks. And the reason it's in green is that your stop is really not quite below this area right here. So if you look at your 15 ticks and where you get, and where's my box here? I'm gonna check where my box is. Just there it is. So if you look at the 15 ticks, it really, it's not far enough. It's below these areas. It's below this area right here. What I see is support here. It's low below here. And so this is, it's reasonable because your stop is below here. Now, it's not quite below this area on this side. I understand that. But we've had this rapid move down and this rapid rebound. I don't know. Is this the area, is this oversold and that we're going to retrace back here? Well, I don't know that. But I think that after you have a move up like this, there seems to be interest in the marketplace. So let's set this as the new floor, this area right now. So if this is the new floor, then anything move up is going to be higher than that. And as a result, I would look at this as perhaps being that we were looking at some type of maybe measured move. And if that's the case, if this was a rapid move up, then this measured move would put us someplace in this area. And as you can see, like this, not only does it find support here, there's a couple, first double bottom, triple bottom sort of thing. It went off of this one, price did get here before it broke. And so you can see that this was really almost a perfect measured move. Here again, this price is, I marked this one as well. So we come back to the trend line. It doesn't really come all the way back to the EMA. But again, this is you could maybe add on at this area. I mean, depending on where you got in on this trade, your stop is really below what this high was, where it just kind of ticked up there. No, it's a riskier trade. Price moves to this high, it turns over, it comes back down, moves up. I've seen right here, like there's support in this area, so perhaps it's worthwhile taking this trade. If you take this trade, your target is above this area, so it's not a bad trade to take in the here. After it breaks, first entry, second entry, maybe wait till this bar closes before you take your trade. But you want to keep your stop below this area. And so this is you take a look at where your stop is, and you take a look where your target is. Price makes its way up here. Second entry short. I marked this one in green. It's a strong bar, but the problem is you probably have to limit in to keep your stop above this. It's aggressive trade. That's why I marked it in green. We moved down we moved down to here. Kind of hesitation, kind of overlap. Finally, it drops down in this area. Now, why did I mark this one? Well, I marked this here for a couple of reasons. Number one, it is a range. Even though it's a tiny one. Okay, there's double tops here. Let's put this in here like this. It's a narrow. Call it a micro channel, micro range. I mean, so we had this micro double top or micro double bottom. So micro top up. Price comes up, turns over. It's gyrating here. Now the last bar is a pretty strong sell bar. Okay. Now, why would I discount it? Anytime I look at trading, and well, not anytime, but what you want to take a look at is what kind of trade would this be? Well, is this a second entry short? No, it's not. How would you characterize this trade? Well, if you added these bars together, the last bar is a fairly strong bear bar. We did have a move down from the top here, like this, okay? So we had this move down. You say that one pullback failed. Can you say it was a second pullback? Well, you could, but there's lots of overlap. Well, let's say that for the sake of argument, it's two pullbacks. So that means that your target is probably going to be somewhere down here, okay? That's what you're perceiving your target. In this case, where's your stop going to be? Well, if you enter right here, your stop is right at this top here, 15 tick stop. And so it's not affords you enough room. Where's the target? Well, if your target is down here, your target would have to break this bottom in order for your first contracts to fill, at least your first stop to fill. So because of that, because it's not now, you could argue that you can make a tighter risk reward, but anything more narrow than 15 ticks is too risky. So the process is, where can you get in for a trade if this is a valid entry? Is this a valid entry? The first thing is that where do you see your stop? Where do you see your target? And then what's the risk reward? And then from there, place the trade. So that's the steps. That's the first steps that you really want to take. Now, if your risk reward is out of whack, if you're not going to get that 1-to-1 or 1-to-2 or whatever you try to do, you pass on the trade and you look for another entry bot. That's kind of the way I do it. Now, if you do that on every single trade, therefore you're always looking for, it prevents one thing, it prevents over trading, because you have to look at your entry, you have to look at your stop, you have to look at your target, and then you have to look at your risk reward. So if you take those 4 same steps every time for every trade that you think of taking, you're not going to pull the trigger and just buy at the market, or you're not going to be, you'll be thinking in that direction. Hope that makes sense to you. Price gets down here. We have a failure. Now this is a bounce. Now, why did I mark this trade in the opposite direction? Well, you could make this argument that this is first entry. This is a failed second entry short with all this overlap, which it is. So if you got in here, it didn't finish. So this is a second entry short that turns into a potential second entry long. First entry, second entry. If you were to enter on this trade, where's your stop? Your stop is down here. Okay, still below these double tops, not quite as low. And where's your target? Well, your target would have to just get to these areas, just to get to this top for you to get your first contracts off. Just has to get to here. Okay, that's all it has to get to, this line. So where's your entry? Second entry. Well, you can quality of entry. Your stop is below, your target's above. That's the way that's what you take a look at it. And as a result, this trade would have worked. Had you kept it at your break even after you got your first contract off and you kept it at break even, you could have ridden this thing all the way to the top. Okay. Now, again, here's another trade that I look at this. Now, why would I consider this a trade? Because I see this one, again, as 2 moves back to this trend channel. However, it's not as, I should mark this in green. It's not quite as clear. That's what it should be in green. But I can see this as a failure. You've already had this one pullback, second pullback. Let's see, the support across here. And a coordinated trend channel that could be developing in that case. This is an aggressive trade, no question about it. Price moves up, pulls back to this area. Again, another trade. Now, this is the reason I like this trade is because, here we go. Stop very close to these areas of support in the past. And where's your target? Target is up here, but no question about it, it's an aggressive trade. So you're going to have to make sure that you get in before your target, your stop is below these areas. Again, you can make that same argument for here. The only trouble with this trade here is that your target is above where the previous double top or previous high was. So that's the difficulty. And plus you're getting this overlap. A couple of other trades, another pullback, breaks the trend channel. Again, this is a second entry short, second entry long right here. And that would have worked out, but you had the reason that you had to break this channel, this top, in order to fulfill your target. And your stop is where? Your stop is down here. So it's evident that after this move, we have this gyration. You can see that price is moving up, but then it's really kind of stacking up here. Now it looks like it's, especially when the EMA begins to really flatten out. Like here, EMA flattened out, moves up. EMA is flattening out near the, we're looking at 2 o'clock. And so here is not a bad place to place a trade. Now, I didn't take this trade. I mean, there's a couple of reasons why. The biggest reason is it's not a bad entry. I mean, it's a strong bar. It's not really a second entry. But the reason I didn't take is that, number one, if you look at your stop, It's not above this area. Number 2, where's your target? Your target have to be below this, but that's not necessarily a bad thing, because I think if you feel that price is at an exhaustion point, then it'll probably move its way down. So that's not really the issue. But then you look at your risk reward. Right now, the risk reward just wasn't as favorable. I don't know if it's going to turn down. If I get a setup here, I might be a little bit more inclined because there's less room or more room to kind of get to the bottom, but it doesn't really afford you that. What you wind up with is this little inside bar. There's no real way to get in on this one unless you limit it in just above this one. I mean, you could do that, I guess, potentially, but look at this strong bar here and this next strong bar. Do you really want to sell against that? In some cases, I've seen Al Brooks, he will short one tick above the previous bar here. Now, in this case, it wouldn't have filled it, but in a lot of cases it does. So that's something to keep in mind as well if you're going to go short. If you're thinking of going short at this time. Now, had you gone short here, it was not a bad trade, and this is where we're at the end of the day. So that's pretty much that's it for the trades. I mean, there's a little bit of stuff that you could look on here, and it was a pretty decent movement. Once you got online with this, I mean, there's a couple of decent trades in here, especially in this area. This was probably the area. This might be a little bit early, but this area here, there's a couple of decent trades in here that you could have picked up on had you done it early enough and looked at the slow high method as a place to get in as far as trading is concerned. I hope that helps. Anyway, this is Vance. Thanks for watching. Bye for now.